18. I will call this audit committee meeting to order. I get a motion to approve the agenda. Moved by Councillor Kim, second by Councillor Gallo. Comments or questions? Seeing none. Oh, Councillor Gallo.
Can someone just confirm whether this meeting is being either live streamed or recorded?
Mr. Clerk.
Through you, Mr. Mayor. Yes, the meeting's being live streamed and recorded to be posted on YouTube as well.
Perfect. Thank you.
Thank you. Always great to get the facts. All those in favor of approval agenda? Opposed? That carries. Any declarations of pecuniary interest? Seeing none. We have no delegations. We have one item. 2019 audited financial statements with audit report. We will have a presentation to be provided by Giselle and Emma from the auditors from BDO Canada LLP. Ladies, I'll turn it over to you. You might as well just get into the presentation.
Great, thanks. I'll just pull that up.
Hi, everybody. All right, so I'm just gonna, I hope everybody can hear me okay. Thumbs up. I'm just going to go over a couple of highlights of the audit this year. So first page, Emma, if you want to, Emma's working the screen. So we're just going to talk about the status of the audit, like what we need to finish, materiality, our independence, any unadjusted differences, management representations. We're to ask you if you are aware of any fraud that happened during the audit, if anything was brought up to your attention, some of the audit findings, some things on internal control, and just other required communications. So hopefully everybody can see this. I know it's a little bit small on my screen, but basically we are pretty much done the audit. The last couple things that we have to do are listed right here. We have to get a management letter, representation letter, and usually that's up to the date that we approve these audited statements. We have to, a few legal confirmations outstanding. So we're hoping nothing will come from that. Usually if there are any lawsuits, the only thing that would have to be disclosed is if something was material that wouldn't be covered by the by your insurance. Subsequent events. So after we approve the statements up to this date, we have to go back and audit from the day we came out of the field to today's date by asking questions of management, looking for significant items in case something happened between when we finish the audit and up to the date you approve the statements. And then we need you to approve the financial statements. And materiality, which is on the right-hand side, we kind of have two levels of materiality. It's approximately 9 million for any capital assets you have, and it is around like 2 million for anything like revenue or expenses. So one of the things we have to communicate to you is our materiality each year. So if you can go to the next page, Emma. We're required to communicate any internal control matters. We just had a few items that Emma will discuss, but nothing major. And just confirming that we're independent of Jason and his team, Emma and I and our audit team, and we're not related to anybody on council. And we have disclosed some unaudited differences. One of our major differences this year was just in the TCAs. The staff came up with, Jason can explain a little further, but basically they came up with some more TCAs and the costing. So we bumped up the TCAs. We did not have to adjust because it wasn't material and it was done this year. Fraud discussion. So I'll just open it up to everybody. I can see most people. Is there anybody that wants to bring up anything that's come to their attention in the last 6 months as far as fraud? Okay. the last thing on this slide is just COVID-19. So what's new this year is we just had to do a checklist on COVID-19 on how it's affecting any organization that we audit. And we have to put a note in the financial statements to that effect. And I'm just going to turn it over to Emma about a couple suggestions we have for next year. And
Yeah, so I'll just go over some of the significant risk areas that we identified through our audit planning and then how we address those risks. So the first is the risk of management override of control. This is a common risk across all types of organizations. All sorts of, other towns would have the same risk, other businesses. And so we address this risk by doing journal entry testing. So we'll review for any unusual transactions, and we didn't note any that were outside of the course of normal operations through the course of our audit. The other risk area we noted was with respect to contributed land, development charges, and gas tax revenue. So with the development charges and gas tax revenue, that gets recorded as a deferred revenue and then is taken into income as those capital projects are undertaken. So we did a variety of different tests in this area, including some reviewing some supporting documentations, vouching cash receipts to the bank, and doing some analytics, year-over-year comparisons in the deferred revenue and revenue. And when we were doing this, we noted that in the prior year, the development charge revenue was understated. And then the deferred revenue was overstated, and the amount was material. So as a result, there was a prior period adjustment made to increase the prior year's revenue and decrease that deferred revenue from the prior year, to have that reflect the correct amount. The other risk area we noted was with respect to the tangible capital assets. And so Giselle had mentioned already that management during the course of the year identified some capital assets that were not on the books. And so they undertook a very thorough investigation of this and engaged an outside consultant and recognized some additional assets in the current year. The amount was not material, so we were able to just record this in the current period. But we did have some additional testing around that we performed to verify the amount that was being recognized. So with respect to internal controls, through the course of our audit, we review controls and we test them to make sure that those are working as they're supposed to be. We didn't note really any issues. The only area where we did have a recommendation that we put into our management letter was with respect to the deferred revenue and those development charges. And so this is something that, we think an extra level of review being implemented there would help prevent any such errors like we saw this year occurring in the future. And then as far as other required communications go, we didn't note anything through the course of our audit that did require any additional communication. Well, I will turn it back over to Giselle now.
so we just summarized on this graph what's been happening with the revenue in your organization. And you can see that back in 14, 15, and 16, a lot larger revenue, which can be the development charges that are coming in if you're spending a lot of money on capital assets. And you'll see here the expenses have gone up slightly too over the last 5 to, I guess, 6 years. And then you can see these annual surpluses, which is the green. So most municipalities are in a surplus for an accounting point of view, but then they use this surplus to buy TCAs, your assets. So if you just bring it down to the next graph there. So what I did is I said, okay, well, what has been your annual surplus, which you can see is these blue lines here. And then you can see that what has been purchased in TCAs, which is the red. So in a perfect world, your blue would match your red, but again, you're saving money for reserves and other things. So you could see that the investment in TCAs was really large in 14, 15, and 16, and now is more like about 20 million a year. We've got the numbers on the bottom of the page. So what is happening to your surpluses? So your surpluses, you know, back in 2014 were 400 and I think it's 64,000. It's hard for me to see. And of that, you know, almost 400 million in TCAs. And if we go to 2019, you've got 561 million in your surplus and 470,000 is in your TCAs. So I usually look, it's good for any new council members, just kind of look at where were you like 5 years ago, where are you today? And the big thing you'll kind of notice is most municipalities, it's about 75% property taxes and user fees are your budget for your total expenses. And that would be similar to other towns your size. If you look for in 2014, remember there was a lot of TCAs, a lot more development charges coming in. So there, it was a little bit higher coming in with user fees and taxation. This is, I just kind of put down the summary of your numbers as far as where your money goes. Again, in 2015, 75 million, now close to 100 million, which wouldn't include the TCAs, but this is your like general government, protection to property, transportation services. You can see you've invested a lot more in environmental, and planning and development has kind of stayed the same over the last 5 years. So on your expenses, again, about 50% of your expenses are salaries and wages. And then again, if you went back to 2014, you just had a little bit more, less in salaries and wages, but more in contract services. So, and you've been around, the other parts of the pie chart stay the same. So nothing really interesting. So I'll just turn it back to Emma about next year's planning report, because basically what we do is we have this year's report to council, and then instead of having another meeting in like September, October, we've been requested to just give our audit letter for next year. So pass it back over to Emma.
Thanks, Giselle. So I'll just go through some of the highlights from our audit planning letter. So these include the BDO team that will be working on the audit, the timeline for the audit, significant risk areas, materiality, fees, the objectives of our engagement, and the fraud discussion is again something we have around our planning as well. So Giselle will be the lead on the engagement. And then in the detailed letter, we've provided more details on the engagement team there as well. And we do strive to provide as much continuity as possible to ensure that the audit goes as smoothly as possible. So our audit timeline will be very consistent with what it has been in the prior year, with our field work scheduled to occur in April, and completion scheduled for June. Significant audit risks, again, management override of controls is a common risk across all organizations. So that's something that we've identified and will be addressing through our audit next year as well. And then as well, the revenue recognition related to the assumed lands and the developer charges. We've estimated materiality to be around 9.4 million for tangible capital assets. That's based on 2% of the tangible capital asset balance. And then other financial statement areas, we're estimating materiality to be around 2 million. And this is something that once we have the numbers for the 2020, we will update those. Fees for the 2020 audit will be at 31,500.
I just wanted to add something about the fees. just so that council knows. You are part of the N6, so this amount is less of a 10% discount because you go together as a group. I think that's the N5 now, because I don't think Newmarket's part of the group, but just to let you know. Thank you.
So the objective of our engagement will be to express an opinion on the financial statements. And we provide more details on that in our detailed letter. So once again, we're required to inquire about fraud. So if there's any awareness of any fraud, so we've inquired today, and then we'll be inquiring with management again once we're out to do our audit planning as well for an update on that.
Sometimes you might get an email from us in the fall asking you, are you aware of any fraud? I just don't want anybody to be concerned. It's just a standard question we have to ask. Before we start the audit, before we finalize the audit, we have to ask twice.
And that concludes the highlights from our audit planning letter.
And I just want to thank Jason and his team who were very helpful on the audit, like they are every year, and very professional. And whatever we asked them for, it was a tough audit just because everything has to be done remotely. There's lots of emails back and forth. I just want you to say that I do probably 7 or 8 municipalities, and the first one I did was King this week, and you guys are the second one to get the audit done. I mean, King is losing their treasurer, so I think that's why he wanted to get things done. But Jason and his team did a wonderful job and are very respectful and just give us everything that we asked for. So we're really pleased with him and his team.
Perfect. Well, thank you, ladies. Council, the recommendation is that that the report number FIN 20-016 be received. 2, that the 2019 audit reports and financial statements for the year ended December 31st, 2019 be approved and published on the town's website. 3, that the 2020 year-end audit plan as proposed by BDO Canada LLP be endorsed. Would someone like to move those recommendations? And then we'll move to questions and comments on the report and by our presenters. Councillor Thompson, second. Councillor Kim. So any comments or questions to the report or to our presenters? Councillor Gallo.
Thank you. In your summary, you mentioned, and I may have missed this, and it's probably exactly what happened, but you mentioned the management representation letter, and you're waiting for signatures. One of the things that I think is still outstanding, but is there a management letter? I haven't seen one.
Giselle?
Yes, there is one drafted. We usually give that to the treasurer to sign. And the management rep letter basically says that we have given you all our books and records. These are all the liabilities and the accounting issues on the town. And it's a questionnaire that management fills out and signs.
Councillor?
So it's not something that we would be privy to.
You can probably get a copy of it if you'd like, but usually it's not necessary for the council to look at that.
Councillor?
Okay, and the other question, just could you go through note 2 in the audit regarding reinstatement of prior period and development charges?
Yeah. So basically, as Emma said, last year, the development charges is money that you receive from the developers, and you receive that each year. And as you spend money on the tangible capital assets, the development charges come into revenue. So what happened is these are huge projects. So there was a timing error where we didn't bring in the revenue into last year's income, it came into this year's income. So when we were auditing that, we noticed that some of the accounts were in a negative balance, some of these larger accounts. So we researched that with Jason and found out that that management should have recorded that revenue last year. They recorded it this year. So it was a timing difference. Doesn't really affect your normal budget in between development charges and your surplus. So that is why we put that note in the statements and corrected it.
Councillor?
Thank you. Is there any impact to last year's financial statements as a result of this?
No.
Councillor?
Okay. That's it. Thank you.
Thank you. Any other comments or questions? Seeing none. Thank you, ladies. I will call the vote. All those in favor? Opposed? That carries. Thank you, ladies. Appreciate it. And thank you, staff, for all the good work. Motion to adjourn. Moved by Councillor Kim, seconded by Councillor Thompson. All those in favor? Opposed? That carries. We are adjourned. Thank you, everyone. See you back.